Good morning everybody, and thank you for joining us today. Welcome to our Green Business webinar on renewable energy sources. Today we'll be hearing from one of our experts, Miles McCarthy, and you will have the opportunity to ask any questions you might have. You can type these as you go along into the questions pane on the control panel, which you should see on the right hand side of your screen. Send them in at any time, and then we will do our best to address them in the Q&A session at the end of the webinar. We'll also be sending around the slides after today's webinar, and it will also be recorded and available to view on YouTube as well. All right, so now I will hand you over to Miles.
Thanks, Annie, and good morning to everyone, or wherever you are in the world. Could be good afternoon or good evening. My name is Miles McCarthy, Director of Implementation here at the Carbon Trust, and look forward to having a conversation today with you about renewables, our view on renewables, what's on offer, what's happening in the market, and what we're seeing as trends. Please do enter any questions you've got or thoughts you've got as we go, and we should have plenty of time at the end to work through those and answer any questions you've got. So let me just move on. And first of all, I'd like to introduce you to the Carbon Trust. If you don't know the Carbon Trust, we were set up in 2001 by UK government initially to support UK business and public sector, but over the last number of years we've moved internationally. We've expanded our scope and expanded the level of ambition amongst our clients and organisations that we work with around sustainability as the market has evolved and developed. We are a mission-led organisation. As a group, we are a not-for-profit group. Any profits generated within the group, we invest in achieving the mission, which is to accelerate the move to a sustainable low-carbon economy. And we deliver our work and we engage with our stakeholders three main ways. First of all, delivering advice to businesses, to governments, to public bodies on policy, on technical advice, on financial advice and guidance. Secondly, we deliver a lot of certification, helping to measure the footprint and impact of organisations and products and services, as well as recognised certification and labels around the world to demonstrate progress that companies or products are making to reduce their impacts, primarily around energy and carbon, but also looking at waste and water as part of the wider sustainability environment. And thirdly, on technology, we do a lot of work around moving technology forwards, helping collaborations to bring new technology and new innovation, to bring down the costs of energy efficiency and renewable technologies, as well as the deployment of existing current technology, encouraging organisations to understand, recognise where there are opportunities to make savings and to help them in that journey. So that's Carbon Trust. We're quite a lot of different activities, but a clear common theme. And as I mentioned earlier, we started in 2001 focused in the UK, but since about 2009 we've been expanding both our scope and our geography, and you can see here where we have offices today, including our recently opened offices in Amsterdam and Singapore. And we are an organisation of roughly 200 people, so not a huge organisation, but we do get involved in quite a lot of different things, and obviously the market we work in is fast growing and active, so it's a good place to be. So just introducing renewables and also the scope of today's webinar. I'm going to focus on renewable electricity rather than the broader topic of renewables. So I am excluding renewable heat and fuels, but it is worth just touching on that because there is a bit of an overlap anyway. So if we focus on the UK for the moment, UK's ambitious carbon budgets and carbon reduction targets do and will require significant decarbonisation of heat. We use a lot of energy in heating, and most of our heating is delivered through use of fossil fuels such as gas, oil and coal. So there is a strong push for renewable heat sources for buildings, but also for industry, and that will include electrification of heat through technologies such as heat pumps, air sourced and ground source heat pumps. So basically a technology as you have in your refrigerator, but working in reverse. So you refrigerate the ground outside or the air outside to heat your building, for example. Applications for biomass in generating heat, and solar thermal technologies for heat generation. So these are outside of what we're talking about today, but it's worth just putting them there on the table, and in particular electrification of heat, because obviously that will require the sourcing of renewable electricity to drive those technologies. It's also worth just pointing out that we are seeing, and will continue to see, significant move towards the electrification of transport to reduce both carbon emissions and local air pollution. Everyone's aware of the growth in EVs we're seeing, but other transport modes as well. And again, that's an important piece to have on the table, because as we bring in, for example, electric vans and cars for businesses and domestic, that has to interact with the electricity supply and generation for buildings, and needs to be part of the consideration when any organization is looking at generating their own renewable electricity or looking at sourcing renewable electricity from grid or other providers. And just finally, just to flag up before I move away from renewable heat, that in the UK, or certainly in GB, excluding Northern Ireland, there are currently renewable heat incentives. So if you are generating heat through any of those sources above, there are incentives for both domestic and non-domestic available through the Renewable Heat Incentive, RHI, and they can be quite significant. They primarily are focused on supporting renewable heat for organisations trying to generate heat that are off gas grid, where the cost of existing heat sources, fossil fuel sources, can be higher than grid gas. In terms of incentives for renewable electricity, we did have the feed-in tariff, which has now stopped, but there is upcoming smart export guarantee, and please do go and have a look at information about this, which will obligate suppliers of electricity to buy any excess local generation from their customers. There's limited amount of information currently available about what that will look like and what the market will offer. There are 1 or 2 tariffs currently available that do already offer prior to the go live date of 1st of January next year. But that's certainly emerging as part of the opportunity for any generators of renewable electricity, if you can't use the electricity yourself through current consumption or storage or vehicles, and if you're looking to export it into the grid. So let's now move on to renewable electricity, and just to introduce the topic and what we're talking about. Primarily, we're talking here about solar photovoltaics, or PV panels, or PV technology, onshore and offshore wind. Those two cover significant part of the UK's opportunity, and in fact global opportunity. And offshore wind is a growing part of the UK solution. We currently have a hold on onshore wind new developments in the UK, but offshore wind is growing at significant pace and is coming down in cost. There are also hydro solutions, and there's been a lot of discussion and debate around tidal barrage and tidal lagoon technologies, as well as some developments of wave technologies, but these are primarily in the demonstration phases. There's obviously application of biomass. For example, Drax Power Station, which was a coal power station, is now moving to using biomass, and use of sustainable biomass is a renewable source for power generation. And then energy from waste and nuclear. I've got them in square brackets there because there are differing, you need to consider the details of them, and also there are different views on those. So if we take energy from waste, there's a range of technologies from incineration, anaerobic digestion for food waste and other organic waste, pyrolysis, and landfill gas. Not all, they need to be looked at on a case by case in terms of whether they are renewables, but there are alternative power generation options available. And the final one is nuclear, which is significant in the UK currently, could be significant in the future, is low carbon, but is not classified as renewable by most. So you often see power generators offering green tariffs, but also tariffs that include nuclear, which are low carbon tariffs. And finally, I've just dropped on the bottom of that slide there, just a snapshot this morning of what the UK grid looks like. And there's a few websites available that will provide you with this data live. But you can see here that as of this morning, we had a small amount of wind and solar, amounting to 5 gigawatts of renewables out of 33 gigawatts of demand. Most of the rest being made up by CCGT on the right-hand side there, which is the gas, and a good chunk of nuclear. But there's a pretty small amount of coal being used this morning, and coal is very quickly coming off our grid mix, and the blend of mix is moving significantly towards renewables year by year. And the bottom row shows you for most of the contributors to our grid this morning what level of carbon emissions were being emitted and where they were coming from. And you can see there the gas is the prime contributor to our 13 kilotons per hour of carbon emissions from our grid. Coal being small because there was a little amount of power coming from coal this morning. So these numbers do move around, are interesting, and if you would like to encourage engagement on where the power comes from, how it's being generated, and how that changes, these types of websites are very useful to get people engaged. In terms of the changing marketplace and the different factors that need to be considered are being weighed up. First of all, the market, I would say, is becoming more complex. There is a wider number of options around how companies buy energy and buy electricity. There will be a growing opening up of opportunities for time-based tariffs. So, for example, if you're bringing on electric vehicles onto your fleet, looking at, for example, charging them overnight on a lower tariff is certainly something that companies will look to encourage organizations, and will offer lower priced electricity when the demand is lower and the supply potentially is available. And also, as I mentioned just earlier, a growing range of offers around providing renewable energy solutions. In terms of energy demand, we are seeing growing energy efficiency, which is always high priority and should be considered before anything else. Very significant energy reduction opportunities, which mustn't be forgotten, to reduce demand in the first place. I mentioned just earlier the emergence of electric vehicles, and this will open up significant new demands and also significant requirement to manage supply and demand. I saw an article this morning about one of the supermarkets that's introducing flexible control around its refrigeration to help the grid to manage supply and demand. And those types of technology mechanisms will continue to grow and be incentivized financially to ensure that a more flexible demand can be used to utilize varying levels of cleaner generation from renewables. Storage is an exciting new opportunity which is growing in importance. Companies are looking at as a way also of taking the allowing the management of excess supply and peak demands to use storage as a way of capturing some of that electricity when the price is high or when the supply is high, and typically they come together, and obviously then utilizing that cheaper energy that you capture at peak times when you don't want to be buying expensive electricity from the grid. And demand management is all about what I just talked about. So there's a lot of new things to consider, demands to weigh up, future uncertainties to try and understand, and complexities coming through. But it also opens up some exciting opportunities for people to become more dependent from their own generation to be more aware and manage their own consumption, and obviously to move to a cleaner energy solution for their organizations. And what's driving this? Obviously, global, UK targets, corporate targets, local authorities, and we're seeing a significant growth in ambitious targets being set. We're also seeing pressure coming to organizations from their value chain, so maybe from their customers. So if you're supplying into, for example, a supermarket, they're keen to see how you as an organization, one of their suppliers, is working on reducing your impacts, and so that can often be a significant lever. Also investors, customers, staff, engaging your staff on sustainability is a very positive move, and one that's typically well accepted and supported. And obviously competitor pressures is one that we're seeing in a number of sectors, where I like to call it the race to the top, where we're seeing companies trying to outdo each other in terms of their commitments and their move to lower carbon solutions, both in terms of power supply or energy supply, and also energy efficiency. And what's a positive story alongside all of that is the significant reductions we're seeing in the cost of renewables. So historically, renewable generation has been more expensive, but we're seeing year on year in the UK and globally dramatic falls in the cost of generating a unit of energy from renewable sources. Onshore wind, offshore wind, we've seen dramatic reductions through innovation, scaling up of technology, and the commercialization of some technologies. And solar PV globally is demonstrating a more efficient generation and lower cost generation, making it as cheap and often cheaper than fossil fuel generation. So this is certainly something which is supporting this significant growth in renewable deployment and use. And we're seeing the same trajectories on technologies for electrification of vehicles and electricity storage. So obviously the costs have to stack up and the business case has to stack up, but these directions are all encouraging. And if we look at UK, I touched on this a little bit earlier, but we are seeing a move away from fossil fuel generation. We've seen coal almost disappear from the UK grid, and over the last summer, the last couple of months, we've seen record coal-free periods in the UK grid of, I think it was 10 or 12 days, if I remember rightly. And you can see there some numbers for 2018, the last full year we've got, and renewables and nuclear contributed 53% of our electricity demand in the UK last year. And that was up significantly from the year before. And you can see there, if we take out the nucleus element, renewables on its own contributed 33.3, so exactly a third of our electricity consumption in the UK came from pure renewables. In terms of looking slightly more global, and this comment I made earlier about the cost of renewables, this is a chart, it's a bit of a strange chart, but I'll try and explain it through. The x-axis on each chart is the cost of electricity in a particular European market, blue being industrial and orange being residential for each country. And the y-axis on each of these four charts is the level of solar irradiation. So the countries that are more sunny and can generate more from from solar PV have a higher position on the y-axis. So you can see there, as an example, Israel, Spain are quite high up, Portugal's quite high up. And what this chart is trying to show is going through from 2010 to 2020, how more and more of those markets across Europe, both in terms of trending lower energy costs and lower solar irradiation available, are moving into the situation where solar is competitive with existing fossil fuel grids. So you can see in 2010, most of Europe, big markets that have relatively cheap electricity and relatively low, or in fact any solar levels, solar PV was not competitive. It was in the white area, and only markets where there were relatively high energy prices, electricity prices, and also encouragingly high levels of solar, like the residential markets in Spain and Italy, had competitive solar PV. And then you can see, as we trend through this decade that we're in now, most of those markets move into being cost competitive in terms of solar PV. So I think that's just an encouraging chart, and it also demonstrates just how quickly solar is becoming competitive in Europe. And in other parts of the world, there are record upon record in terms of the low cost of generation from solar farms and solar installations. So I mentioned drivers for renewables, and I just wanted to quickly introduce Renewable RE100, which is a program, global initiative driven by Climate Group and CDP. And this is a growing group of organizations, primarily companies, large companies primarily. There's now 193 who have committed to switching to 100% renewable electricity in their organizations. And you can see there many recognized names. And if we look at what's driving this move, it's, there's a number of drivers, but primarily it's around reducing their CO2 emissions, meeting their CSR commitments, and also growing recognition that there are economic opportunities to switch to renewables, and potentially it's economically sound to move sooner than later, certainly in certain markets. There are recognized barriers to, however, to switching to renewable electricity, availability of supply, some challenges around regulation in certain markets, and policy incentives being sometimes uncertain. But markets are moving at pace, and also we're seeing, due to some of these early adopters of renewables, growing pressure on markets, governments around the world to look at how they can deliver cleaner solutions for organizations operating in their country. So just want to quickly talk through approaches to how you would adopt renewable electricity, and also introduce some examples along the way. So if we talk about the obvious solution and the, let's call it the most visible and maybe greenest solution, that would be generating renewables on your own organization site, so your own building. So we see this in domestic, we see this in commercial and industrial, and it's a very positive step to make. It's a very visible way of demonstrating your company's or organization's commitment to renewables, and it's potentially a attractive way of generating low-cost electricity and building your own generation, your own capacity. There are some weaknesses, including that for most organizations, this will only meet a small amount of your demand, and there is an upfront capital commitment cost to that. Here are some UK examples that we have evaluated in the current year across a number of different sectors. This is just a small snapshot, but you can see, I think, from this that based on these numbers, which are without subsidy, without incentives, which now are not available in the UK, you can still see payback periods here, which are acceptable to organizations that want to make this step. We've seen a diminishing level to zero of incentives, but the payback periods that we see of 6 to 10 years have remained fairly consistent, I would say, over the last few years, as those incentives have dropped away, which is a testament really to the way the market has continued to drive down the cost of the technology and to be able to deliver projects of these sorts of paybacks. However, as I mentioned earlier, let's not forget energy efficiency is still much more financially higher performing for the low-hanging fruit than these numbers. So For energy efficiency, we see paybacks of anything up to 4 years, but often significantly lower than 4 years. So that's why it's very important for people to focus on energy efficiency, reduce your demand. Once you've done that, then look at these types of solutions for generating your own energy, your own electricity. And just to highlight that Carbon Trust does run in the UK an accredited supplier scheme. It's called our Green Business Directory, and on that scheme in the UK we have 20 renewables suppliers, primarily solar PV, that organisations can source and go to if they're interested in getting prices or consideration for installations of renewables on their sites. So first one is investing yourself in renewables on site. The next stage down would be where you would encourage another organisation to invest in renewables either on your own property or close to your own property, and where you would then take that electricity and utilise that. So it doesn't require your own organisation to fund the investment. It potentially can deliver lower cost electricity, and again it's a visible demonstration of a commitment to renewables and sustainability. But obviously now you're sharing the benefits of renewables with the investor who's made that investment. And again, for most organisations, it's unlikely that this approach would deliver all or majority of your demand, but it certainly would contribute and could contribute significantly, and is a model that a number of organisations are looking at. Moving further down, we then move to what we call power purchase agreements, and if you really want to scale up the scale of your renewables sourcing, but also have a strong commitment to the renewables generation, what can be done is arrangement like this, where you are committing long term to taking the renewable electricity from a renewables installation, but that renewables installation, that wind farm, that solar farm, isn't located with at your demand. So you are using the electricity grid, to deliver the renewable energy that's generated on your behalf to your site or sites in primarily in the UK. So this has the strengths of, first of all, again, not requiring you to make the investment yourself, but you are looking to make a longer term commitment. It's less visible, but it still is a strong story to tell around your commitments. But the renewables don't need to be located next to your site, so there is a much greater opportunity to scale the installation. Challenges being that as you start to utilise the grid and also encourage others to invest on your behalf, the financial return from that is diminishing. But what it does do is allow you to make some long-term commitments and lock in renewable generation for your future demand, and demonstrate, protect your energy costs, your renewable energy costs, with those longer term contractual agreements. And then this is just a small example of exactly what I just described. Google is one company that has utilised this at an early stage. This is an early market now currently, but it is a growing market. And what this diagram really just shows is the renewable generator is exporting the renewable electricity to the grid, but is stripping out the certificates that represent that renewable generation and handing those to Google. And then Google, at its data centers, is buying electricity from the grid and matching its consumption of blended grid consumption to the certificates that it's bought from that generation, and that way it can demonstrate it's actually matching, at least matching its consumption from its renewable generation, or the renewable generation that's done on its behalf, remotely from its sites. And secondly, because those certificates have been passed to Google, that generation from the renewable generator cannot be then sold on to another party, in effect be double counted. We then move on to green tariffs, and again, this is an area that has been widely used and utilised, and there is a growing number of green and low carbon tariffs in the marketplace, much more flexible, lower commitment, but obviously potential for supply and demand and increasing costs of sourcing of low carbon electricity. But there isn't a big upfront commitment. You're not making a long-term commitment to that generator, and potentially a small premium at the moment, but that could grow as demand for renewable electricity grows. And finally, you can meet your electricity consumption with certificates that are what we call unbundled from generation. So rather than buy a tariff which has certificates, you simply buy grid electricity at your sites around the world, and you then purchase separately these renewable energy certificates that represent generation of renewable electricity somewhere in the marketplace. So they are unlinked to your own demand. You haven't made that long-term commitment, and again, you are open. You're not making a big commitment. You're open to flexibility in the market for those certificates and potential increase in the cost of those certificates. And also, as more companies and maybe your competitors start to move towards more robust demonstration of commitment to renewables through power purchase agreements and on-site generation, certificate approaches may start to look less green, let's call it, as time goes on. And hopefully this chart tries to capture that those different factors. So in terms of reputational, the stronger reputation, the real clear demonstration of your commitment is with renewables on your sites, through to certificate schemes which are maybe lower benefit in that area. In terms of commitment and ease of implementation, the top of the chart here are more challenging and require investments. The lower end is currently a cheaper solution, and relatively straightforward, but potentially longer term doesn't give you the benefits that the top opportunities provide. And this data is slightly out of date, but what's interesting here, this is a snapshot of how the members of RE100 are meeting their commitments. And what's interesting here is if you take that second line, you can see, although still a significant proportion of their delivery of renewables to their organisation, a significant reduction in the use of certificates and a growth in the use of contracts or power purchase agreements, that top line, which we've seen continue to grow. Own generation is there and is growing, but it's a small proportion of the total generation that they're sourcing. And finally, just to try and categorize and to try and give examples, this is very much illustrative, but really it's to show that of those that are making these commitments to move into renewables, there are some that are making very quick commitments, 2020, 2022. You can see on the x-axis there, some a bit longer term. And also in terms of the maturity and the ambition of those commitments, the bottom sector are primarily certificate-based commitments being met. As we move up the y-axis, trying to classify organisations looking at those that are making investments on site or through power purchase agreements. And some of the real leaders at the top there are going even beyond their own consumption. And for example, IKEA looking at offering renewable solutions for their customers, switching to fully generated generating on their own sites enough electricity to meet their demands, and also they're looking at moving towards electrification of transport as well. So and if Unilever, second example, they're looking at, they've got a power purchase agreement on some wind farms, but they're also looking to generate excess power that they can use for local communities. So a range of levels of commitment, and I would say companies are beginning to move up this y-axis. And again, this is very much an illustrative chart, but to try and illustrate the range of approaches that organisations are taking. And you can look into each of these examples and more what they're doing, how quickly they're looking to do that, and how they're achieving that. Very quickly, just to look at a few case studies. So Land Securities, as an example, here in the UK, has committed to taking a renewable tariff, 100% renewable electricity supplied by smartest energy, and matching all of that generation with certificates. And the Carbon Trust has worked with smartest energy to certify that tariff as being one that's meeting its requirements to have allocated renewable certificates for all of the generation it delivers to its customers. This is an interesting chart showing, this is a Tesco chart that I took, which shows how, as a business, Tesco's is looking to move to 100% renewables in the next 12 years or so, but also how they're looking to use a mixture of on-site generation, which is a relatively, even in 2030 is that dark blue section, but primarily PPAs, so these grid-enabled renewable commitments. For here you can see they're half of their consumption globally, and the balance would be through certificates. So you can see an illustration of a large consumer, one that's operating in a number of markets in Europe and Asia primarily, looking at how their current generation, or their current electricity supply, which is a combination of just conventional grid and half of which is matched by certificates, moving towards a more committed solution in 2030. I mentioned Unilever earlier. So here again, another example of a grid-enabled PPA. So they have, as a business, committed to generation from a number of onshore wind assets, committing long-term to meet their requirements in their businesses and factories. And you can see there at the top left some of the commitments they've made. And BT, one of the largest consumers of electricity in the UK, again, locking in 20 and 15-year PPAs for wind farms across the UK to meet their consumption requirements going forwards. And finally, just wanted to remind people of the Green Business Fund, and this presentation is part of our Green Business Fund services we're delivering, and looking forwards, there are a couple of workshops if people are local and would be interested to come along to learn more about reducing their energy consumption, primarily looking at energy efficiency, but also touching on renewables. So please, if that's relevant to anybody in your organizations, do have a look, do register for those two events coming up in the next month or so. And we also have these webinars that are accessible through our website and the Green Business Fund webpage, and a growing number of publications, sector-based, technology-based, also that should be useful for people looking at particular technologies or working in certain sectors, that again can be accessed through our website, Green Business Fund website. The address there is at the bottom of the slide. And finally, some tools we've also got, which we've recently launched for people to use, again available through the website, helping you to evaluate your carbon impact, helping you to look at your energy use and how energy is used in your organization, and also specifically a lighting tool, an area that we've seen significant investment in terms of energy efficient lighting, primarily LED lighting, and helping organizations to evaluate that technology for their organization and understand the business case for switching to efficient lighting. That's all I had. About 40 minutes, I think, so maybe 38 minutes. So hopefully that's been a bit of a whistle-stop tour. Apologies if rattled through it at a pace, but hopefully it's opened up some thoughts in people's heads. Thank you for everyone for listening in today, and thank you for staying to the end. and I wish you all a good day, and thank the Green Business Fund for supporting this webinar today. Goodbye.
Thank you.